Hi guys, my name is Nengi and I want to thank you for stopping by and watching this video. This video is number 2 in the series I created for people to get an understanding of digital currencies and how they came about, especially Bitcoin. And in this video, I'm going to lay the groundwork for you to understand how we got to where we were, to the point where people decided to make decisions to create digital currencies. So the first thing I want to cover is how banks work. So the dependency on banks. So a lot of people actually don't understand how banks work. And to simplify this, let's pretend you have $1,000. You walk into a bank and you give them that $1,000, right? So in your mind, you have $1,000. However, what the bank does is that it's required by law to keep 10% of the net deposits, which means in your case, your $1,000 that you deposited, they're only required to keep 10% in reserve. Everything else, so 90% of that, they can really do, I shouldn't say, whatever is within the legal limits, right? And that's what we call fractional reserve banking, because they're not keeping all of the money that you deposited. They're actually taking a fraction, turning around, lending it, doing whatever it is that they do with it. Now, you ask yourself and you say, well, not everybody needs that $1,000 back right away, right? And typically, that's what normally happens. When you deposit money, you take out a chunk here, a chunk there. However, you don't need the whole amount. The only problem with that is that it has actually been proven that a disaster can happen and people will want their money, and guess what? Their money won't be in the bank. This is how the savings and loan crisis of the 1980s happened, where over 1,000 banks of the 3,200 failed. And guess what? The government only had $25 billion of taxpayers' money to rescue these banks. So guess what? Banks, this whole system, this is a systemic problem. Problems can arise where banks fail. And if the government can't step up to actually help them out, bail them out, guess who suffers? You and me. So we lose trust in that system. And to this day, I don't even know if that requirement has changed. I wonder if Frank Dodd changed that requirement. I'm not sure. So that was one of the issues. And this is really, like I said, we're laying down the groundwork to show you where we came from and to the point where something like Bitcoin actually came about. The other thing that I want to talk about is, the decisions that a bank makes. So let's say that $900 that you have, someone bright says, you know what, we can take this money and invest it in X, Y, and Z and generate X amount income for the bank, and then turn around and give that money back to the money that we borrowed to the owner. The only problem is when you make bad decisions, it actually backfires. And this is exactly what happened with the financial crisis of 2008. This is when banks invested in these toxic loans that went south, and all of a sudden they were left holding an empty bag. What do? Here you are, you have, and this is the whole thing that you have to understand is this is not just one bank doing it. It's every bank, because they're in competition. Oh, I'm making 10% return. No, I'm making 30% return. No, I'm making whatever return. How are they making their money? Oh, they're investing in this and that. Oh, really? Let's get in on this game. And guess what? All of a sudden, everybody's on the bandwagon. And then, kablooey, the system fails. And again, taxpayers have to step in and save and bail out these banks. Not just for the banks, but again, because 90% of that money probably belongs to the people. Again, fail in the system. So that leads us to fiat currency. So when we say fiat, we are really talking about currency that's backed by solely by the faith in a government or a central organization like a central bank, right? It's actually funny because I was just reading an article where a government decided that Bitcoin was not a currency because it was not backed by the government. However, let's step back and just look at the history here for a second, shall we? Talk about the crisis that happened in Zimbabwe and Venezuela. And I'm actually going to pause here for a second because I want to get the correct numbers for you. So Zimbabwe, which is a classic case, this is currency that is backed by the government of Zimbabwe, right? The only problem is they made bad decision and it led to an 80 billion% in inflation just in a single month. Just in a single month. You as the person from Zimbabwe had absolutely no control over this. You can't really, contribute to anything. It's like people making bad decisions that lead you down a bad path and you have absolutely no control. So think about that for a second. Here we are, someone saying, oh, I don't see that as an actual currency because it's not backed by the government or a central organization. However, what happens if that government fails to deliver on the trust that people placed on them? What happens then? Or let's think about Venezuela for a second here. The Venezuelan bolivar inflated over 800% in 2016. People, the thing that I'm trying to say here is that when governments get in trouble, they say, what can we do? Let's print more money. Print, 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 print. No problem with that. The only issue is that the more money that's in circulation, the less the demand, the less the value. So here you are having a currency. You have $2 trillion that can buy you salt. No value there. It's just not a good store of value. So with these two big points, someone sat down and said, hey, we cannot continue with this. There's got to be a better way to approach what we consider something that is easy to transact, is not based on the faith of a government, which is not, by the way, backed by anything, that can help people, just regular people, day by day, me here, someone else being somewhere else. So that's really my presentation for today. That's the background information that I had today for you. If you have any questions, please feel free to connect with me. I always leave my contact information below. I hope you're enjoying this series. Next up, we're going to talk about how Bitcoin came about. And it's actually very exciting, and I'm actually looking forward to that. I hope you guys are looking forward to that as well. And I'll talk to you soon.